following presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.
Let's talk futures. Joining us live from somewhere in Nevada, Mike Arnold, Path Trading Partners. Mike, how are you?
Good. It's actually Arizona, Scottsdale, Arizona.
Oh, my bad. I said, what did I say? Nevada?
Nevada.
Because I have Vegas on my mind for some reason.
I lived in Vegas for a little while.
Did you really? Oh, that couldn't. I wouldn't survive. How was it?
Vegas is a fun place to visit. I don't think I'd live there again. I love the desert, but between Arizona and Nevada, I gotta lean towards Arizona.
All right. Well, me and Mrs. Kaggs used to go every year. We were married there. We've been out there, I don't know, over a dozen times. And I get the sense that, on a slow Sunday afternoon, I'd head over to the casino to bet on a game or play blackjack. And that's not a good recipe.
I got married in Vegas too. I did a drive-through wedding with my wife.
Did you really?
We sort of had to make it fun. We went and stayed at the Four Seasons there at top of Mandalay Bay. And we did a drive-through wedding. We didn't have to get out of the car.
Wow, that's amazing. So I was we had a suite at the Monte Carlo Hotel back in the day, and we were doing work for a fairly large futures broker who's no longer around, called Aileron, and the Greenbergs family owned it. And they're like, oh yeah, here my wife used to work for Steve Wynn. Here, we'll comp you a room. And I'm like, really? So we had a pretty good experience, but it was still a Vegas wedding, if you know what I mean.
I completely understand.
Yeah. Anyway. All right. Well, I appreciate you being here today with us, especially today. I mean, we're looking at these stock index futures making all-time highs, and a lot of people are thinking, well, I can't go any higher. I want to get short. What's really, really the story here on some of these stock index futures?
Well, from my perspective, you got to trade with the trend at least till it triggers some bigger reversal patterns. Because we might be setting up for a very minor toppy pattern going into this week. We got some key cycles getting to top on the daily and the weekly over the next few days. But is it somewhere to get aggressively short? Aggressively short would be a gamble at this point, since we're talking about Vegas, would be a gamble rather than a strategic trade. If we break down below some key levels, then we get into the more strategic trading from the short side, but we're not there yet.
All right. So there's still some more steam on the upside, I think is what you're saying.
It can pause up here. We are getting to a very toppy level. Now, if you trade the macro trends still, this being the election year, you can still see neutral to upside is the macro pattern. That does not have to hold. Again, past macro patterns can be invalidated. However, there's nothing yet from a price perspective on the charts that's even remotely close to invalidating those.
So is there anything to the sell in May and go away, or is just someone made that up because it rhymes?
No, it used to have a lot more predictability. Over the last number of years, especially since the great financial crisis, and we've been just pumping money into the economy. I mean, still, even with a quantitative tightening, you're look at the deficits we're running. So when you have a ton of money sloshing around, we used to have artificially reduced rates, and then rates are back up, but we still have so much money sloshing around. We're running deficit spending. You're gonna keep overriding cycles that were present years ago. So that's why selling may go away used to be much more true. Now I haven't paid attention for it to years because really follow the money flow.
Yeah, that's a good point. It used to be easy, right? It used to be, hey, 60-40 stocks and bonds. And then we saw a pivot to alternative asset classes, a little less on the bonds. Bonds got hit big time, bonds, notes, treasuries. And now finally, there's a lot of folks on the sideline saying, okay, this could be the year of treasuries.
Yeah, no, I mean, especially short. That's the one of the things you got to consider, always risk adjusted returns, because especially your short term bills and everything, there's some great. This is where I really am cautious to the upside. This trend's still up from a trading perspective. The trend's still up, but from a longer term buy and hold perspective, I'd rather lock in some things with rates and even on the medium term, because the upside, when you get into really risk adjusted returns, the favorability is not there. But from a trading perspective, that's a different story. You trade with the trend's your friend, the trend is still up in the short to medium term.
Yeah. So let's take a peek. Do you have an E-mini S&P chart up, and could you
Yes.
walk us through what you're seeing?
Yeah.
All right, there we go.
We have a couple things here. Let me just zoom in here real quick.
Yeah.
Come on. Oh boy.
I'm catching up to you. I'm trying to open up my I have a peek on your desktop here. I'm trying to open up my window.
All right.
There we go.
So what I was talking about is we do have a potential massive double top pattern. And why do I say potential? Because it may never trigger. But the key thing is still from the low back. I switch this. It's still from the low. Very sensitive mouse. Back on the 19th of April. That's the key. The front run area I'm watching, and this can change if we do take out last Thursday's highs. But right now, the key area I'm watching is right about 5110. It's technically 5109 on a closing basis, because we get a close below there, which is a long way off. The trend still is up until we get a close below there. And then that shifts the pattern to where we could retest the area for the April 19th lows. If we close below the April 19th lows, we can trigger a very significant potential pullback pattern all the way to 4,600. So that being said, though, we're up. Now we do have a very minor topping pattern that if we close below the lows from the 17th, we could see a short, maybe a 3-4 day pullback. Pullbacks can always turn into something more, but I'm watching for that's the key level I'm really focusing on, is the low from the 17th. Also, what's handy up here, so I talk about the harmonics all the time. We haven't really talked about harmonic extensions, because I need to know what invalidates a pattern too, or I'm just not going to guess on where, if the market keeps on marching, where are the next places what are my next targets? Where will I react to a continuing level? That's where I'll use, I've changed the fib extension tool to harmonic extensions, and I can already at this new high area come up and really figure out right around this 53.78, 53.80 level is a key area for me to raise stops. And again, around 52.25, 52.24, 52.25, if we trade above there, it takes this potential double top pattern off the table. Now, that does not mean this low would not still be key, but it takes the double top pattern off. So I have to use different analysis with targets if we break down there.
So Mike, when how pronounced does it have to be to break that double top, right? Because, price doesn't always just stop at one number sometimes.
If we trade it all through the 54.25 area, any kind of trade through there takes the potential double top off the table.
Okay, gotcha.
Doesn't
So
need
let's
to
also
close
go.
beyond there. It just has to trade through that area. And
Okay,
that's
so
based off the 25% extension. And there's two kind of harmonics I use. I use the reverse harmonics, which go back in time. So I'm taking the key low from the 19th of April, going back in time to the prior key high from the 1st of April. And then I'm doing the extension from that, and I'm doing the 12.5% harmonic and 25. Now, if we trade above the 25 from a reverse harmonic standpoint, that really invalidates that potential double top. If we do not trade above that level and roll over and then take out the lows from the 19th with a follow through close, we have then triggered a massive topping pattern, which can take us back, and easily retrace a big portion of the lows from last October, early November, where we had the key reversal bottom.
Mm-hmm. So, Mike, let's explain. All right. So, when Mike refers to harmonics, it's basically he's using the fib tool, right? The Fibonacci tool, and then changing the default fib numbers to harmonics, right? Which is, think about a piano keyboard, think about octaves. He's just dividing it by an eighth, which gets you 1250 increments. Is that right?
Correct. I go by the 12, 25, 37.5, 50, 62.5. And we've talked about that in the past, and just editing that, I found the probabilities which we talked to, I believe on the last time, some of these actually increased by over 6% by shifting on a closing basis to harmonics versus key closing fibs, like the 62.5 versus 61.8. There is a very substantial shift. People might go, well, you're talking 62.5 versus 61.8, it's only 0.7. But on a closing basis, I found a drastic difference.
And would you use the harmonic? I'll call them harmonic fibs for now. Would you use those on any time frame?
Yes. Now remember, larger time frames are more significant than shorter time frames, because a close on a 1-minute bar is not as beyond a level is not nearly as important as a close on a daily bar.
Yeah.
Or a 4-hour bar. So that's where you really have to look at stuff and keep the time frame in mind. And all right, we close beyond the key level. So where does that take me in the short term versus long term? For example, if we look here at our shorter term, this is a 1-hour chart. What I will be watching, if I call up my retracements,
I know, I do that all the time.
I gotta take off the extra sensitivity on I gotta adjust my mouse settings at some point, but we'll see if I can get this going. All right, if I take this high and come back here.
There you go.
And put on the harmonics. So what I'll be watching for in the shorter term is we have now passed from the highs back from last week to the lows at the end of last week. We now have repassed the 75% harmonic. So this is in minor double top territory, which I was talking about earlier. If we close back below these key lows from last week, then that's a shorter term pullback signal. And that could always be, there might be some front run setups to get us there before that actually triggers. But once that does trigger, and that would have to be at least on a 1-hour, if not 4-hour follow through close, then I would be short. And I'm talking for a day or two, maybe 3, not long-term short. Other than that, the trend is still up. So I have to err on the side of, for intraday trades, I want to go with even the macro trend. And people ask me, well, why do you focus so much on the daily charts? Because even if I'm trading a 5-minute chart or a 15-minute chart, I want to be err on the side of being in the correct direction of the daily moves. When the daily trend's up, you want to focus, from my perspective, I want to focus more on being long, because pullback trades can get cut short. And I'm watching for, on pullback trades, I'm watching for buying opportunities. When things shift down, like let's say we close below those lows from April 19th, I will start shifting to, now my sells will be extended to the downside, and I'll be a lot more patient with buys. Until that happens, I'm going to trade with the trend.
So, okay. So, but would you ever see like let's say not a double top, but a multi-top pattern where you say, all right, this is holding, I'm getting short?
It would be short-term short. Again, a short-term short can tie into a long, it can roll into a longer-term short. For example, I had just talked about a little mini double top up here.
Yeah.
So if that were to trigger, but then let's say we start collapsing through very key levels, can that turn into a bigger trade? Could that turn into a more aggressive short? Yes. But as it sits, the probabilities are not that it's going to turn into a huge downside move.
Got it.
So it can. I'm always aware of that. That's why, as a move unfolds, you have to keep doing your analysis, and your analysis can change, especially if a topping move signals with a fair amount of downside momentum, slices through key levels without even reacting to it. And it's like, all right, maybe this is turning into something bigger. Maybe this is the 20% that's going to keep running. But if again, if the probabilities are, if we close below last week's close, that there might be a 2 to 3 day pullback, I have to stick with those probabilities more so than saying every time it's going to go, I'm going for a big win, I'm going, the market's going to collapse. I mean, how many topping patterns do you see that, even if you look on this daily chart with the trend from last November, yes, you had a couple of bigger pullbacks, but most of the pullbacks were just 2 to 3 days. So why would I be counting on more than 2 to 3 days unless something shifts? We had earlier at the end of March, we had a double topping pattern that triggered. It ran to the first target. It stalled out there. It bounced back up, but then we took out those prior key lows from the beginning of April. And then we got the extended pullback. And we actually got an extended pullback into very key areas on a weekly basis, including the rotation zone. And then we rotated back up. So we never really made a longer term top. Even the multi-day pullback was still a pullback. Now, I have a weekly chart up. If we break down below the lows from 4 weeks ago, from that level I said before, it is 40. Well, let me give you a quick 49.65 area, 49.63 area. Then we've put in a massive potential topping pattern that could take us back substantially lower, even back down to that 4,600. If that doesn't happen, I got to still stick with the trend being up.
Okay, so let's go up on the chart. So you have the extensions, right? You have a 12.5, you have a 25. Let's just hypothetically, let's say we close at that 5,400 level, right? What's the most important extension number to you? Is it 37.5? Is it 62.5?
It's 25%. Before
25%.
25%, because the market roughly goes in those intervals. Now, there's two key areas. If we keep marching beyond this reverse harmonic area, then I'm going to go to the forward harmonic extension. So the next major one I will use, I will come to the lows in October and come up to this significant level before we just broke to new highs. And why am I choosing this level? Because this level we had this substantial pullback from it. and I'm going to come up and load my extensions. And apply them. And then I can see here that if we took out this 54.24 area on the extensions from the key low to this major high that led to the pullback, my minor extension would be around 54.70. My major next level would be 5,600. So I've already mapped out, because we're in uncharted territory up here. So how do I know where to somewhat say, with the rhythm of the markets, where actions I'm going to target, either for some shorter term trades, or at least from longer term trades, use it to move up stops, and or possibly take something off, because if we start getting topping patterns up there, I'll wait for that possibly multi-day pullback to reestablish a position.
Okay, that makes sense. That's exactly where I was going with this, because we, when you're, me and Tom Schneider, when we're doing our analysis, we're always saying, okay, there's nothing but blue skies ahead. Where's our target going to be? I don't know. There's nothing up there. There's no areas of interest up there, but now we have some areas of interest.
Exactly. That's why I like it, because it helps me plot out something. And these aren't just levels to, hey, let's just pull out some levels out of our rear end. I've worked with these levels for years. And it also gives me an area. Let's hypothetically say we just blew through the 54.70 area without even pausing. Then we're in a super strong market, which gives me, okay, the momentum's really running. But if we get to that 54.70 area, and it's an area, it's not a brick wall, and then set up a possible topping pattern on a daily basis, I have to be very aware that we could be in for another key pullback. So I'm going to manage both my short-term and my medium-term trades accordingly.
So, all right. So, but you just brought up an interesting point. Does the velocity of the move matter? In other words, how quickly it jumps up to the next level?
The velocity matters on how quick, if it goes through a key level without even pausing, then that's telling me something, because these are areas we should get a reaction to. If the market does not react at a key area, that gives me very valuable feedback. The 12.5% is minor. The 25% is major. So if we just blow through that 12.5% without blinking, then I'm really focused on that 25% being the next key target as the area. So if we were to blow through 54.70, and we had a massive daily bar that just took it out, didn't even react around that area, I'd be looking at around 5,600 as my next key target area for another potential short-term top. So I'm going to manage the position accordingly.
Okay. So let's say though we trickle upward, day after day, up a little, up a little, up a little, up a little. Then we get to that level. Same thing though. If we take it out, it's still you're shifting up.
If we start if we just trickle up, waning momentum, we start getting waning momentum up around that 54.70 area, I'm going to be on higher alert. Okay, if we set up any kind of short-term toppy pattern, I'm going to have to respect that, because we could easily then pull back to this breakout area, this 53.30 area, or 5,300. We could get up to that 54.70, and it wouldn't be a shock then to pull back to 5,300 and retest prior resistance becoming support.
Got it. All right. Well, that makes sense to me as well. That makes sense to me as well. I mean, right now, if you look at the trend going back from last November, it's steady Eddie, right? Up until we hit that peak in April 1st. I mean, that's just a nice upward sloping line for a long time. Then we had that retracement, and it seems like it's almost like, I don't know, V-shaped recovery, right? It just raced back up to those highs pretty quickly.
Yeah, but that does not mean this has to continue, although it favors a continuation, at least in the short term to medium term. Yeah, I'd really be watching this 5,100 area in more of the medium term, because if we got a key close below that, we could easily retest those April 19th lows. We break those April 19th lows with a close. My perspective then drastically shifts going into the second half of the year.
Got it. Okay. And then your exponential, is that an 8-period EMA that you have in the yellow?
Yellow's 8, blue's 21, and that makes up the rotation zone. And you can see a lot of these dips into the rotation zone were fantastic buying opportunities. And why do I keep that up? Because even now, if we zoom in and dip into that rotation zone on any pullbacks, then I'm going to be watching for shorter term buying opportunities, shorter term bottoming patterns, because we're likely to bounce there. If we close below the 21, my next key area is the green line, which is the 50 exponential. If we close below the 50 exponential, then I'm going to the next key area, which is all based off harmonics.
Okay. And what's the red at the bottom?
That's the 200 simple. The
Okay.
200 simple, it's the simple because it tests out better than the 200 exponential.
Got it.
Which is, that's a key area for long-term support resistance.
Yeah, we're nowhere near that.
No. So I will pay attention if we do break down to that area. But if we close below those April 19th lows, my first key target is 47.80. I'll pay attention at the 200 area, but the 200 is an area, again, not a brick wall, not a concrete floor.
Yeah, that makes sense. That makes sense. Okay. All right. So you're you call them what'd you call them? Inflection zones or
the extensions?
Rotate. No, I'm sorry. Your rotation zones. So your rotation zones gives you this is telling you, hey, it's time to get busy. It's time to leap into action.
It's time to really focus on, we've pulled back into a very key area that in a bull market is traditionally support. So I'm going to very actively look for potential bottoming and potential support patterns. Now, once we close below that 21, we're in neutral to further breakdown mode. Like when we closed below in the beginning of April, we closed below that 21. And then it's like, okay, now I'm shifting to neutral mode. And then we start breaking down below those key lows. I'm shifting to short-term bearish mode, and I'm watching for the bigger pullback. And after we hit some bigger pullback levels, then I will watch for bottoming patterns again. But I'm going to be patient, and I'll more favor on the short-term trades, like the intraday trades, I'll favor the short trades versus the long-term trades. And then once we start bouncing back up and get above key levels, then I'll shift to, on the intraday basis, the long-term trades. Again, I'll really be actively looking for long-term trades. Still, I'm actively looking for, on an intraday basis, I'm favoring the long trades versus the short trades right now because the trend is up.
All right. So if we're tracking though below the 50 exponential, then your point of view might be the opposite.
Exactly.
Yeah. That makes total sense. We're a long way away from that.
Exactly. So I'm going to be, people who try to, there's so many potential topping patterns. You can always find a reason to, oh, it's going to end, it's going to end, it's going to end. But have we ended even from, would you say, the October lows from last year? We've stopped the uptrend? No, we had a bigger pullback, but we haven't really stopped the uptrend yet.
Yeah. No, I like to tell people, especially when people call and say, Jim, it can't go any higher. I was a commodity broker for 20 years. People call me, Jim, I'm going short. It can't go any higher. And my response is, well, of course it could. It can go higher. It can go lower. It can stay the same. Why do you think it can't go any higher? So that's not a trading methodology, right?
No, it can't go any higher. Well, how many times? Eventually, we will put in a bigger top. It could happen this year. It could happen within the next month or two. But until that happens, you don't want to try to call every top, because every time you try to call a top with the trend being up, you're wrong multiple times. There will be a bigger top, but I'd rather be patient and wait for that to trigger. I don't have to try to top tick a market. I want to trade with the trend. it's a fool's game to try to top tech a market. If you do it, you got lucky.
Yeah, I agree with that. I agree with everything you said. Mike Arnold, Path Trading Partners. How do we find you, Mike?
You can look at me, YouTube, I have stream every day, just Path Trading Partners on YouTube, or follow me at MG Arnold on X, and you'll see the streams go on there and anything I think is interesting that I'll post on there. So those are the best two ways to follow me.
And you stream every day on YouTube?
Well, except the weekends, yes, every day, live.
Oh, okay. All right. All right. That's good to know. That's good to know. Good stuff, Mike. Always appreciate your point of view. Love your analysis and appreciate you being on with us today.
Thank you. I look forward to being back in the future again.
All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.